Hey guys, I just wanted to take a moment and congratulate the winner of our most recent contest for having a 30-minute to 1 hour free consultation with me for all things real estate. And it goes to MVP Properties. So guys, take a minute, reach out to us on the email that's on the YouTube channel. We'll get back with you and we'll get a time set up. Look forward to getting a chance to chit chat and go over whatever details you may have. So this video is going to be just talking about creative finance and mobile homes, manufactured homes, trailer homes, whatever you want to call them. So don't forget, if you like and find this video helpful, take a minute and like it. Don't forget to subscribe to our YouTube channel. And of course, if you have any comments, take a minute and comment below. We'll do our very best to answer those questions. Now, coming up, we're going to have another drawing for another free 30-minute to 1 hour conversation with myself, talking about all things real estate. So don't forget to comment, and on our various videos, we will go in and we will pick and choose from those and let you know who the next winner will be. All right, let's have some fun and just talk about mobile homes for a minute. I know we all know what a mobile home is and how to buy and sell with financing and what it all looks like, because there's a lot of differentiation between mobile homes and, of course, stick-built or homes and real property that's out there. You know, a lot of people call mobile homes by different things. They call them a trailer. We've heard that term. They call them a mobile home. And then you hear manufactured home. And I really think that all three of those are the same. It's just semantics overall. Maybe it's a varying degree of quality or something else along the way. Because guys, there are some really good looking manufactured houses out there that are really mobile homes that are trailered to your lot, put together. Maybe they put additional skin on the outside when they're there, hook it to a foundation, whatever it might be. But there can be some really good looking stuff out there like that. The same way with mobile homes as well. So I really think when you just talk about the differentiation between those, it's just a matter of semantics, maybe a level of quality a little bit along the way. So as you get into this industry, if you ever like to get into it, you've got to really decide, is this mobile home I'm buying, is it personal property, which is also known as chattel, or is it real property? There's a big differentiation between those. So keep in mind, if this is personal property, it means it has not been affixed to a permanent foundation. It means it's very akin to buying a car, buying a boat, hell, buying a bicycle, where you may buy it and finance it in some format. With a mobile home, they have serial numbers on them. And of course, you can oftentimes look these up on the state's websites to determine if it's still personal property versus real property along the way. Now, if it is real property, how do you know it's real property? Well, first and foremost, they're going to remove the tongue of the trailer where it was hauled out on, and they're going to remove the wheels of the trailer too, so it can't go mobile again. Secondly, they're going to convert the foundation and place this on a more permanent foundation. That might be piers, it might be a slab, whatever it might be, in order to affix it to a permanent foundation structure. Next, the owner of the mobile home has to turn the serial number in and file a form with the state in most instances. At least here in Texas, that's the process. And the state will send you back a certificate that converts the mobile or personal property now into real property. So it'll be treated just like a standard residential home out there. You take that certificate, file it in the deed records of the county where the property is located, and that property is now going to be treated just like real property and no longer like the personal property that it was before. So it's important to really understand that conversion process, know how to look it up and track it to make sure you know what it is you're buying in many cases. So when you look at mobile homes versus real property, there's different documentation that is used along the way. If you're buying a home that's on a trailer, this is going to be in almost every instance personal property or chattel. So you can actually get the conveyance or the ownership of that property provided to you by filing proper forms with the state. Maybe you get a bill of sale also from the seller in that instance. Now, if the seller is going to carry back financing on the property, maybe it's actually a mobile home lot. Maybe it's a seller who's providing seller financing on it, and they convey the ownership. Oftentimes, they're going to want to file what is called a UCC lien with the state. And they file this with the Secretary of State's office in the state where that trailer is located, which evidences that that trailer associated with that particular serial number has existing financing on it, and it has to be cured on the next sale of the property along the way. Now, in those instances, there's certain documentation that is used, and I'm sure that on a state-by-state basis, that paperwork is a little bit different, but it's going to be probably very similar along the way. If, on the other hand, you're buying a mobile home that has been converted to real property, we're going to treat it just like any other house out there, utilizing a note, a deed of trust, and a warranty deed along the way for conveyance. So when you're first getting out there and you are hunting down this product, if you come across a trailer park, a mobile home park, whatever you want to say, maybe it's a mobile home community, and there's some nuances there in all of these. A trailer park, now more commonly known as a mobile home park, is where someone's going to be renting out a lot and they're going to park their mobile home on that lot. In those instances, these properties are going to be personal property. They're not affixed to a permanent foundation, and there's going to be a lease associated with the lot that has to be paid out. On the other hand, if you find a mobile home, it could be a single wide, a double wide, two-story. Okay, I'm only kidding. I haven't seen one of those yet, but I'm waiting for that. It's going to be on a lot of land, and so often these have already been converted to real property, but not always. And so can you hook up a mobile home on a piece of land that you own? Yes. So that you have real property on one hand, and on the other hand, you have personal property. And of course, if you're looking to buy a situation like that, you actually have a bifurcated transaction. The mobile home, which is personal property, is going to be handled just as such, where you buy that either outright and there might be a UCC lien recorded against it. Maybe you buy that under what is called an installment sales agreement. Okay, what is that? Well, an installment sales agreement is very akin in the real property world to a contract for deed, a land contract, an agreement for sale, where it says you pay me 100 payments of $500 each. I'll give you the ownership interest, the title to the bill of sale for this mobile home that's out there. On the flip side, if it's already real property, of course, as I said earlier, there's going to be conveyance of the property by a deed to the property. And maybe if there's financing being carried back, it's going to be financed with that note or that deed of trust that's out there. Now, if you haven't already done this and you're considering getting this industry, trying to buy a mobile home, again, not real estate, but personal property, and get financing on it is a difficult scenario. So many banks won't even look at or consider doing it. There's numerous reasons out there that banks don't like it. High default rate, maybe insurance issues, and I could go on and on with various reasons that a lot of financial institutions have along the way. And so oftentimes you're relegated to private capital of some type that will work with you in financing the acquisition of those mobile homes. Again, on the flip side, if that mobile home has been converted to real property, it's just like going to a bank or a mortgage company because they're all now financeable. Now, different banks may have different standards if the manufactured mobile home has been converted to real property, where they may still have something against doing it because it's not a stick-built home. You just gotta shop around, but mobile homes that have been converted to real property, you can obtain an FHA loan on these and various things of that nature along the way that allow them to be very financeable in the marketplace. So now that you have bought your mobile home manufactured house, and let's assume for a minute that you have bought a mobile home, so it's not real property, and your goal is to use creative financing in order to sell it. Well, how do you go about doing that again? Well, I mentioned earlier, it's just like when you acquire that property, to sell it, it's the same scenario. Keep in mind though, if you bought this property and you don't own the title to that property yet, you cannot sell something you don't have. So we're now going to be looking at most likely some type of installment sales agreement so that as somebody is paying you terms, maybe you're paying your financing lender terms as well, so that once you get your front end acquisition paid off, you have title, you can then more easily finalize that back end transaction along the way. So again, so often in these scenarios, you're going to be relegated to an installment sales agreement, as we said, which is just what it means. You pay installments in order to get the ownership of the property. Can you lease that property? Absolutely you can just as well. On the flip side again though, if you'd already bought this and it is real property, or if you bought a mobile home, you can convert it to real property by putting it on that permanent foundation. That then allows you to do a back-end sale that may wind up being like any other real estate transaction, where you're able to sell it with a note deed of trust. Maybe it's going to be a wraparound note deed of trust. It works both ways, just as easy out there. Now, as you consider to get vested into this industry, you need to take time and research your state's requirements. Different states are going to have different licensing requirements. Maybe if you do just one transaction a year, you have to be a licensed dealer. Maybe 3, 5, 10. There's some number out there that the states are going to have that say if you do more than that number of mobile home transactions in a year, you have to be licensed with the state as a dealer. So before you cross that threshold, make sure you've done your homework with your state, know exactly what that is, and if need be, go out and get that mobile home dealership license along the way. And every state out there is going to be a little bit different step by step in what you look at and what you must do. Now, another thing that comes up both in the real estate industry as well as in the mobile home industry is this thing called dealership status. And dealership status is a taxable scenario where the IRS could actually tax you on the gain on sale in the year of purchase of your property. So what I mean by that is if you were to have bought, let's say, a piece of real property for $100,000, you sell it for, let's say, $175,000, and you get $25,000 down payment, and you carry back a $150,000 note. Well, that $25,000 is going to be ordinary income in most instances. Got it. You're paying standard tax on that, whatever your tax rate might be. But then your buyer pays you that $150,000 they owe you over the course of 15, 20, 30 years, whatever it might be, and then you pay your tax as you get income on that property. However, if you are classified as a dealer, the IRS can tax you on that difference between your purchase price, the $100,000, and your note amount, $150,000, or $50,000 in the year that you bought that property. So for instance, if you're in the 30% tax bracket, you're paying an additional $15,000 in taxes the year you bought that home or mobile home in the year you bought it, which can make a huge dent in your profitability and your ability to do business out there. So as you get into the creative finance business, take a minute and talk to a knowledgeable CPA about dealership. In fact, you may want to get several CPA's ideas about this because they do vary, state by state, but just little by little on whom you're talking to along the way. Oftentimes they'll say things like, if this is all you're doing, you may be classified as a dealer. If it's the lion's share of your income, you might be a dealer. For instance, in my scenario, I've got multiple companies that do multiple different scenarios. So I'm not vested in just any one particular entity, which takes me out of that dealership status. But a lot of investors who are focusing solely on creative finance may need to think about and contend with dealership status out there. So I've got to be honest, when I got into the mobile home industry, marketing these properties gave me a little bit of consternation getting my head around everything. I've been so indoctrinated into the single family residential investment community for so long. I'm used to buying a stick-built house on a piece of real property along the way. And I haven't been accustomed to buying a manufactured home or a mobile home or whatever it might be that's out there. In fact, I haven't even been accustomed to buying a mobile home that has been converted to real property on land until just recently. And what I have learned is there are different strokes for different folks in everything that we do. Just like you can go out and buy a $5 million home, $1 million home, a $500,000 house, or a $100,000 house. You buy what it is you want to buy, what you might be able to afford, or what your end game is. Everybody is different out there in what they're looking for. There are a huge number of people who want to be debt-free. They simply want to have a nice place to live, and maybe they want that manufactured home in a mobile home park for the amenities that it offers. Maybe they want to take that mobile home and put it on an acre of land, 5 acres of land, 10 acres of land, whatever it might be. They don't need to convert to real estate. They're happy the way they have it. Maybe they do want to convert it to real property. You find that everybody has a different role and a different goal out there in what they want to do, and they're satisfied with those scenarios. And so you've got to take yourself out of the equation on whom you might be. You know, in that same line of thought, there are other people out there who would prefer just to rent a home versus own it. There are those that would prefer to rent an apartment or a condo versus owning that condo possibly. So everybody is different in what their goals are, what their needs are, and where they are. But so often in the mobile home industry, and I'm getting out of the high-end manufactured industry where these really, really nice manufactured homes may cost $250,000, $300,000, $400,000, and they are good-looking properties. But there's also a huge segment of people who are really looking for that much more affordable dwelling spot, whatever it might be, where they can buy it with maybe easier credit, lesser money down in a pocket, lesser qualification issues and things of this nature, and pay it off in 3 years, 5 years, 7 years, 10 years, but a very short time frame, as opposed to the traditional 30-year home mortgage or 20-year home mortgage, whatever that might be along the way. And so instead of thinking everybody is like yourself or wants to reside in a particular neighborhood, a particular area, whatever it might be, it's interesting to put yourself in other people's shoes who have a much different thought process along the way. So think about those kind of things as you're doing your marketing. I find that the marketing is very similar though to the residential community because you're still marketing for housing. Whether it is various types of bandit signs, whether it is Facebook marketing, it's just retooling your marketing a little bit into what it is you're selling that's out there. Uh, Billboards, other things of this nature help to sell these kind of items on who you are, where you are, and what it is you're trying to accomplish with that mobile home marketing. You know, I also have looked at this from the standpoint of profitability. And one of the things I learned many, many years ago by one of my first, I guess I'll call him a mentor in the industry, was everybody wants to own, let's just use this as an example, this $300,000 home. I know in today's world that doesn't sound like a lot, but it's you own a single home, you're in a nicer neighborhood, you're doing maybe with white collar, long sleeve people in the home, and it's all well and good. The problem with that is though, is that if that house goes vacant and for some place, maybe it's a rental property, your percent of loss is 100%. So his next comment was, drop down to the next level. Go buy two $150,000 houses. Okay, so you drop down maybe a notch in your level of people who are going to live in that home, who have a little bit less income than that $300,000 home. But now your risk of loss has been cut in half from 100% to 50%. In other words, what's the risk of both houses going vacant at one time? In addition, you get a slight bump in your profitability, probably somewhere between 10 and 15% over the rent you were getting on that one single home. But then what he told me was, if you really want to learn how to make money, drop down to that next level. That's where you deal in four $75,000 houses. So I can now own four $75,000 homes for the same price as that one $300,000 home. But now this is where the real numbers kick in. Now my risk of loss has been cut down to 25% in the event of a vacancy. But my profitability has gone up to 40%. So when I'm talking about things like this, I often relate this to the apartment community, where historically apartment complex builders build 70% one-bedroom apartments, 20% two bedrooms, and 10% three bedrooms or four in that regard. Why do they do that? Do they do that just because that's what they want to do? No, because they're getting those same ratios that I just laid out for each of the units. They get a lot more money per square foot for those one-bedroom apartments than they do for those three-bedroom apartments. And I kind of look at the mobile home industry in the same way, where I'm out buying distressed mobile homes at low price, refurbishing them at a central location. And in doing that, I'm almost able to buy a 10-to-1 ratio right now for mobile homes versus single family. That's a pretty doggone good ratio, and I'm hoping that my income ratios are equal to or even greater than what I just laid out there. So guys, I hope you found this at least a little bit insightful, something to think about and consider when you're going out and looking at maybe the mobile home industry. It is a very different industry. There's a lot of education required into it, a lot of research you need to have before you get started. So if you found this helpful, take a minute and like it. Don't forget to comment below. And at the end of the day, guys, don't forget to subscribe to our YouTube channel as well. We'll see you guys next time.